Hey, it's the Market Sniper. How are you doing? Yeah, in this video, I'm going to cover a number of key economic topics, and I'm going to take you to the charts and tell you where the trade is. And that's right. We're going to be discussing the collapse of the Eurozone debt markets. That means rates up. This is going to have the effect on all UK, European homeowners, your property. Your payments on your mortgage are going to go up. Your ability to sell your properties are going to go down. The purchasing affordability of those properties are going to go down, all as a result of a likely binge in debt as Europe rushes to, you guess it, fill the gap of the withdrawing United States. So, America, other points that will be discussed. The collapse of the European debt market, the subsequent result that will have on European property prices. Further to which, why America wants a recession, why Trump will be creating a recession, why you are already in and have been for a recession for quite a while, and that it gets a whole bunch worse. That needs to be covered. What effect that will have on the dollar and the debt markets. We will be covering all those key elements, and we'll be explaining and reminding everybody that you never talk about the dollar solely as the dollar. You should actually view it as the UST, Treasury stroke USD system, on the basis that it is in fact a debt-based fiat system. The fiat money is borrowed into existence, and that when the likes of the dollar milkshake theorists brag about how firm the dollar has been, they are ignoring how relatively weak the US debt market has been and how it has collapsed. We'll have some images to show you also of that. So let's get on with some charts. Maybe just before going to the charts, let's just remind everybody of how debt systems work. So when your rates go up on your debt side, when your rates go up on the debt side, that tends to make your currency go up, but the valuation of the debt go down. When your debt value goes down, currency rates go up, and as a result, your currency appreciates. So what we're actually seeing here is the collapse of the US debt that we called in 2020 August. That's fallen approximately, and we will show you this, 49% from its apex high to where it is today. You have essentially had a debt devaluation. The rates went up, and as a result, because relative to all the other nations, the US's rates were also higher, the currency also goes up. In Japan, the opposite is the case. They continue to buy and support their debt at an artificially high value. The debt value is up. They keep the rates very low because they have a lot of domestic debt. However, they don't rely on foreigners to support their debt, so they have artificially low interest rates. The currency typically has performed weakly amongst the first tier nations, apart from every now and then, because everybody borrows in the cheap charge interest rate yen, converts it into dollars and speculates in the stock market, apart from when those carry trades unwind and you get a bit of a risk-offy feel. Watch out right now. Maybe you want to watch that one a little bit. And then when you get the kind of environment that eventually ends, the water level, you'll note, is right at the top. You keep adding debt, eventually nobody is high enough really to be breathing for too long. And you had, with the Liz Truss events, insufficient tax take. You had the Bank of England failing to raise rates at the same speed as America, so money flew out of the debt markets. The debt market value dropped. The rate should have been allowed to go up. However, that couldn't happen because Britain doesn't have the whole world borrowing in currencies. In fact, everybody sold British debt the debt went down and the currency went down, and you get a snapola, just like you got here, where both sides of the equation were drowning. And that is the final play for all nations in this. We got a microcosm of it, but they quickly put the genie back in the bottle in that instance by firing the very radical behavior, firing a month-old prime minister. It's unprecedented. And the chancellor by saying, terrible, terrible idea. Well, the markets didn't clearly like that. By the way, we'll be covering how the rates are actually higher, and a tax and spend prime minister is now in play, who also wants to build a military and keep attacking Ukraine's enemy, Russia, on behalf of them, and done a 100-year Friends of Ukraine deal, where we will always be supporting, providing, of course, some minerals. It's very interesting that everybody is rushing for minerals. It's very, very interesting. So that's a little bit of a learner. Whilst we're talking about minerals and all of that, and we turn to the charts, the first of which being the French government bond, it's very interesting to hear the people behind the DMT who talked about the dollar, apart from gold, buys the same amount of commodities as it would have done almost a decade and a half ago. That's 15 years for those that don't understand, which is a popular cry for our lead dollar milkshake theory friend. Actually, suddenly, UK wants the resources in Ukraine. America wants the resources in Ukraine. America wants Greenland, not because of its population, but because of its resources. America wants Canada as a 51st state, as a jokey thing, as resources. It seems like everybody's suddenly woken up on resources, and is also at the same time cutting. America and Elon are cutting expenditure. They don't want any more expenditure. This is their defense minister. We covered this. We've shared the slides often. Not in our interest to retain individuals whose contributions are not mission critical. That is code, my friends, for a reduced State Department, a reduced military, a reduced supports for the supports. At one point, I think it was about for every one soldier in the field, there was around 36 employees. Well, you're going to be doing a lot smaller number in terms of the support. There you have elongated with his brat standing next to Drumpf, also without a suit. We've got 2 trillion deficit. If we don't do something, the country's going bankrupt. It's not optional for us to reduce the federal expense. It's essential. It's not optional. It's essential. Your de facto vice president is talking on the economy on behalf of Trump, who probably battle a little bit. Don't forget this curve, the reversion of the yield curve, the gold line. The gold line has already reverted back above zero. You are now in the any moment now yield curve inversion crash. We've had the reversion back positive of the yield curve inversion, and all that's missing is the labor, the unemployment turning up. The unemployment turning up. And I will say to you, with all the cuts that are being planned by yours truly, Elon and Donald, that this is about to do exactly that. And every time you ended up in a gray zone recession, these gray zones are very, very thin for how long the recessions were. By the way, that whole thing is meant to encapsulate the CV19 period. That felt like 3.5 years to me from 2019. Don't know how it felt to you, but it felt a long old time. And never mind the subprime crisis that took a decade and a half to get out. It felt a lot longer than that too. But you know, you get lies, damn lies. They told you, no, it's just a year-long recession, and then it was over. So you will see the lagging indicator of unemployment move. When do they like to do big crashes? They do it 3 times more on the center-right policy party rather than the Democrat, leftist, communist, Bolshevik party. You can see 18 versus 6 over there. So there we have. Trump proposes trilateral agreement with China and Russia to mutually cut defense budgets by 50%. What has the spending of Russia got anything to do with Trump? What has the spending of China got anything to do with Trump? This was an overarching desperate ploy, because they need to cut defense and they don't want to be outspent, which is what Reagan did to the Soviets for the Yeltsin, the final victory and the coming down of the Berlin Wall, he outspent them. He outspent them because he could go from 3% to 5% of GDP in spending, and the USSR at the time would have had to go from 20 to 40% just to keep up. That bust him. Okay, whose turn is it now? There's the F-35s rotting in the desert. Here's the expenditure on the military-industrial complex. Why we have said Halliburton, BAE, all the services of statism and defense contractors are no longer going to get the largesse. Plus, we've highlighted why NATO expenditure, no matter which one of these diagrams you look at, it comes somewhere between 60 and 70%, is predominantly American. They can't do it anymore. What does Elongated say? Again, in a separate statement, America is on a path to bankruptcy. Interest payments on the national debt are now higher than the Defense Department budget. They will kill defense spending. They will come out of this with 1/10 of the size. There's your rotting F-35s you paid $109 million for per unit in some future desert, minus their silver and copper wire. That's my prediction that I've made for you on America. It is the right sizing. I think it will be 1/10 of expenditure after multiple cuts, probably in a decade and a half, that America's defense will then settle down, and their ambitions will be far more moderate, like defending their own borders and very little presence outside the rest of the world. Why? Because the credit card got pulled. The credit card got pulled, guys. This is what no one's understanding. Not enough people are talking about it. The 2020 call on the debt markets was the pulling of the credit card. I want to show you the TLT shorts. These guys didn't listen to the market sniper. They listened to Druckenmiller and Paul Tudor Jones, who only came out at the back end of 2024 about how they were shorting. Look at this run up. Extreme shorts on US debt. That's a long-term 20-plus duration TLT. You have 9 trillion to roll over before you do one issuance for your current years of expenditure. An absolute largest by all measures. That is the poison chalice that Janet Yoda Yellen has handed. It's part of the planned deconstruction and demolition of the US economy and all their far-reaching limbs and control in and throughout the rest of the world. She did that. So the short interest is record high. These guys are late. They should have been short in 2020 when it was 160, and they could have run it down to 80 as we did. But they are late now to the trade. They've followed in, and actually the short is the European debt markets now. The new short, and that's already started. It's not as early notice as I gave in August 2020. We've been talking about this in the community. We did a live trading day not so long ago where we were discussing this. This is your trades now, and this is the facts of where Europe is going. That's right. Let me show you France. Let's take the 10-year standard. We are calling for rates to go through 4.6% in France. Not so long ago you could have had them at 3.05. That's 3% over here. They're going to go through 4.6. It is already in a major triggering event. It has begun to fall. The people have wised up in the bond market, certainly, to the fact that a recession in America will get a bid in the bond market on TLT. We will show you TLT. Let's get the TLT. We've got to contrast these together. The TLT is going to fail to go down for a bit. That's actually going to likely have a rally going on. So let's get a shorter term period on here. The TLT. Whoops, we got it the wrong way around, I think. Yes, we have. Let's go over here, over there. TLT. That was an inverted chart. It will only confuse you. TLT is at the lows. That's the head and shoulder when we shorted it. That's down to the bounce, and then the wait for the right shoulder, short again, all the way down. It's at 90. It traded into the 80s, 82, to the short side. What you're actually going to get is a little bit of a rally period because they're going to drop rates. What does dropping rates do? It actually pushes the value of bonds up. Why will people buy bonds to allow the dropping of rates? Two reasons. They're going to crash the hypervalued stock market. All that money has somewhere to go. The smart money will go to gold on the basis that this is stagflation and we're going down. But some of that money will also go in bonds. Where's Warren Buffett's money? It's all in bonds. Warren Buffett has been selling for 2 years and building up a massive treasury position and earning interest for a disinflationary event. How smart is he? Does he know things before we do? Yes, he's been doing it for a while. He's a big old oil tanker. If he has to sell Apple stock, it takes a while. If he has to sell shares, it takes a while. And he has been doing, and he has record bond holdings now. During this period, the value of the bond is not likely to go down. It's actually likely to rally. So with that, the interest rates will go up. Others are going to start following Buffett, selling their shares, buying the bonds. Hypervalued stock market, you had a duality of either bonds or stocks. Obviously the bond market collapsed, so you can see it here. Let's just measure it for you, by the way, for those that question whether it really dropped 50%. You can see high to low is 54%, and to today is 49.72%. A 50% loss from when our the 2020 COVID events, and from our call over there, you're at a 44% loss, and to its absolute low from our call, 48%. In a market that never moves until recently, much more than single-digit percent, and is the stable component in a 60-40 portfolio that generates a little bit of yield and has a stronger year when equities sell off because people hide in bonds. That's what we're talking about happening. It's a stabilizer to the 60-40 portfolio, but they eliminated gold. For some crazy reason, they eliminated the gold. That's where you're at right now, guys. This is actually going to rally. The extreme shorts are always late. There's too much sentiment, too bear on the US debt, and we take you back to the European debt. The rates are much lower. Why is France rates much lower? Well, they didn't spend as much on military, but now they're going to start. Good luck. You're going to run 4.6. That takes the quality of French debt up to the standards of and levels of American debt. Throughout this period that American debt has been in the 4% range, European debt has been at 3% and Germany at 2.5%. We'll be looking at all the Northern European. It's the Northern European nations, the main contributors net into the Eurozone, that are going to get crushed most by the debt, because the debt isn't going to be raised in Cyprus or Greece. Neither Portugal, Italy or Spain. The real losers are the spine of Europe, the biggest net contributors, which ends with Germany. But let's work our way there. Let's enjoy the story. So, property is going to get crashed in the Northern European nations. People that use mortgages to buy will battle. Now, France, they don't use so much mortgages. There's not that much participation. But the United Kingdom, well, now there's an interesting one. But it is going to have an effect on the affordability for those that do borrow to buy. So we're calling 4.6% on the 10-year, one of the fulcrum debts in the French markets. What are we saying for our Dutch friends? We have many Dutch followers too. Thank you, my Nederlands friends. Baie goed om saam met julle te wees. I'm sure you have no idea what I just said, because that's Afrikaans. But anyway, you'll forgive me. I don't do the full Dutch. 4.6% for Holland. So 4.6% for France, 4.6% for Holland. This is actually a 7.98. It's a reasonable trade. You can put the stop here. You've had a big break. You've made first interim. You've pulled back. You're heading now for second interim up to 4.6. You were trading as low as 3%. The Dutch, very similar to the French numbers. By the way, these are upside HVFs. We are predicting a debt-based collapse. You go from 3% to nearly 5%. That is huge. It is huge in a sleepy, lumbering market. You are watching the structural devaluation of debt. We have continued to say this is a debt devaluation. Fiat and debt. That is how they make your money buy less. They destroy the debt first. The interest rates go up. Your euro will actually do a bit better than the dollar during this period, and you've already seen it start to happen. It's not going to be such a dollar dominant period. You will hear Brent Johnson being a little bit quieter, but he might brag about the debt being stronger because he's forgotten about talking the debt when the dollar was strong. That's what tends to happen. That's what tends to happen. You need to view both. They're all seesaws with one side up. You can't have a 50% view where you only look at the dark side of the moon and you forget the shiny end. And this is what's going to happen. The euro will be relatively firm during this period against the dollar because interest rates going up, but it is a hidden debt crisis, just like it was for the dollar when they printed for the rest of the world during CV19 and turned the 40-year bull market as we predicted. And we said that's the most significant prediction we've ever made. And you're seeing the second round repercussions of this, where Europe now has to match the ugliness of American debt too. And this is part and parcel of a debt-based collapse. And they will use the geopolitical narrative of we must fight Russia. Evil Russia must be fought. Fight them, hire soldiers by. We must always have a vein open for the military industrial complex to vampirically suck the blood of the citizens through fiat proliferation and devaluation. And you are watching the debt devaluation half, and you will live the fiat devaluation half in a hyper-stagflationary environment of very poor growth and very stubbornly high inflation. That is what the chief Satans have decided to do in terms of impoverishing you. If you are not seeing this, not understanding it, and not taking the appropriate action to protect your financial standings, you are under attack by your overlords that run your cartel of corruption, fiat proliferation, and undermining you and dragging you into ever higher tax brackets. You are going to go into complete scavenge mode, the EU, in terms of taxation. Absolutely scavenge mode. They are going to come for every little red penny. Unrealized capital gains will be put on the table. It's all going to come. It's all about disempowering and taking your wealth away from you so that you can become a serf on state. You should resist this with every little ounce of your being. So we've done France, we've done Netherlands. Time to go up another level to our last two big hitters. Of course, the Great Britain is no longer part of the EU experiment, but manages to do no better for it. In fact, they put in a party that just wants to replicate a smaller version thereof of tax extraction. Tax extraction. Labour has come in with a remit to tax, and they have sworn that they will make the pip squeaks. That's right. And instead of 4.6% as an upside HVF with a target to be met, this one broke earlier. You already had a wobble on Britain, very leveraged financialization of everything. The City of London, they double down on financial services. They have no manufacturing of any meaningful scale anymore. They are turning on their farmers, and they're going to tax their way to prosperity. Genius, I tell you. They're going to tax their way to prosperity. They're going to ensure they're going to out-EU even the EU itself. This is a dash to trash. This is who can be the biggest idiot, who can wear the dunce hat even soonest and run into that corner and destroy citizenry wealth. But it is by intent, not stupidity, because they are captured cartelists in a game of crashing the global wealth of the Western nations to force you into a technological oligarchical worldwide grid of reliance on state with surveillance finance and central banker hegemony control across all of us. That is where you are at right now. 4.7. You will run 5.8, quite likely reaching very close to 6, if not running 6%. 5.8 is the upside HVF target that we are giving you. It's already moved since the last time we did it. So you won't be able to enter at this level over here. So this risk reward is already now out. I would not actually trade the British one. It is already a little too far up in terms of where it's gone, but it could indeed overperform, and I've warned about the 6%. So now we bring you to the one that is the most tradable one of all, the spine, the central spine of the EU experiment, and it is Germany. And you are getting this late because you're not a community member. Book a call, the link below, and you too could be finding out about this a whole bunch sooner. There was a triggering event, a beautiful little primer in the funnel, squeezy Japanesey, insider, even bigger squeezy. That's right, only this isn't a Japanesey squeeze, this is a Brockwurst Bund squeeze. Yeah, this is what you're going to getting, and it will take you through 4%. And don't forget, this was something that was at under 2.5%. Germany was under 2.5%. Germany had manufacturing. Germany had major vehicle brands. You are being killed and destroyed by BYD in China on the battery cars. You're being killed and destroyed by higher energy costs of intent by the likes of Merkel throwing out nuclear energy, and then the whole war with Russia thing, and the pipe being blown, and all of that stuff that you're so happy to go along with. Not you, the citizens. Your captured government intends to destroy your financial system. They are run by chosen ones that are inherent on destroying other people's societies, and will go about doing it in a manner to enrich themselves and leave you impoverished, bitter and fallen, so that they can exert their control over you. That has been the intent all this time, and you are going to see 4% on German 10-year yields. And as I've already stated, it was sub 2.5 not 2 weeks ago. We're in 1 week. That's the previous week. You were at the bottom low there of 2.4%. We're telling you 4%. That is around 70+% increase in your rates. That is going to affect property, house pricing, and it's going to make a greater stagflationary effect. You are watching the collapse of the European funding system in the same way that America has led the way in the collapse of its funding system, the debt markets, and future European governments will be doing what Trump and Elon are doing, which is going to be cutting government jobs, cutting this, reducing ambitions. They have to finish the job of bankrupting their country and seeing a 9 trillion wall of rollovers before they go, dang, maybe we shouldn't be spending so much. Those gold-gilted pensions, those gold-plated pensions for workers, because of unions this, unions that, all are going to come under siege. The current generation is going to be left having to pay for the previous generation. It's a transgenerational fraud that is also part of the narrative of what's going on. Deals that were signed for people that have retired on gold-plated pensions should never have been done. The debt of previous years are being left and rolled on to the younger generation that cannot be afforded, and they're going to extract on the final working poor. They're going to do wealth taxes. Every single thing I've told you, if once I've told you 100 times, you need to leave Europe. You need to leave Europe badly. You need to leave the United Kingdom very, very badly. If you can't see the funding mechanism failing when it starts to hit levels like that, the interest payment to the special banker cartel with the unique privilege of borrowing your money into existence, which could just as easily have been done by your government, but no, we need to give some private group of people this exorbitant privilege where we pay them a small fortune to usury extract against the citizens. That, my friend, is the setup that was the 1913 Federal Reserve, the Bank of England, and all of them before, the BIS. These are your parasites running you into the ground, and you sit there and you eat it like slow dripping poison into your vein. You think, such is life, it couldn't have been any other way. Oh, woe is me. You consume it, you allow it. There's no pitchforks in sight. You do not take this pedo classes to real task for all the corruption that they are bringing about, and destruction to your life standard, your quality of living, the predictability, the unsoundness of your money. Everything that they have done is an attack vector of compound interest, proliferation, and absolute corruption against you. and you sit there and you gobble it up, you will stay in Europe and you will eat your poverty, and you will know that I told you and that you never acted. And you must know it and take it to the grave when you have to think about whether you can even afford that coffee in the morning. You were told, you did nothing. We have a community that are preparing people for exactly this. That is wealth building, capital preservational, and seeks to secure you the maximum freedoms in times of reset, which you are slow motion witnessing like a frog being boiled, that you don't even see it. I am busy telling you every single level and every single rate call we have done from the first time we called bonds in August 2020 that was a collapse has been 100% accurate. There is not a single person on YouTube that can tell you the rate calls and bond calls that we have done in the last 5 years. There's one that's been missed. I'm sitting here telling you the UK, I am telling you the European northern states that your rates are going up. Your property should be sold. Your excess property should be sold. You should be turning those funds into sound capital money, real preservation. And it isn't Bitcoin, it's gold, and you will eventually in time see silver and miners to serve you very, very well. But let me tell you, your government is buying gold, your central bankers are buying the gold. They have chased it up to the doorstep of 3,000. They're desperate for it not to break those levels. They might be backing off a little bit right now, but they will continue to buy gold, and they are negotiating for resources. So to all those dollar hegemony, UST dollar hegemony types that think the dollar still bought the same amount of commodities generally apart from gold as it did a decade and a half ago, that tweet that garbage out, that has to be debunked. Let me just tell you, here's your coffee price. Should you have any doubts, you like a cup of coffee in the morning, here's your Robusta bean coming at you hard and fast. Robusta, Robusta, Robusta. About as robust as I'm feeling, about as angry as I'm feeling on your behalf today. Here is your weekly coffee chart. Tell me if you really seriously think that the dollar is buying you the same amount of commodities as it did a decade and a half ago. What garbage they throw out, some of these hegemons, for the treasury dollar system. And by the way, it's the same for the euro, it's the same for the pound, it's going to be the same for every derivative fake out money that is not real money but currency. You're sitting here looking at it. You're looking at it at 25, and 10 years ago and a half is 2010. Your coffee value was 1230. Today it is 5.516. That's on your Robusta bean. That's your cheaper bean, by the way. Have a look at Arabica and you will see that it is very, very similar. We will also do cocoa for you. You will see right there the soft calls that we gave 2.5 years ago on softs have absolutely done all that we said they would. 10 years ago in 2010, roundabout here, your Arabica was 129. It's 387 today. It hasn't really begun. The commodity bull market will begin, but it's not so big in the energy space for now. Consumer wrecked. It is getting big on the softs. If you have a look at cacao, have a look at cacao. Oh my God, have you seen this chart and what it's done in the last decade and a half? My goodness, how could you even say general commodities, the dollar is holding its own? How could you be so stupid? We don't even have 10 years back, but you're around 2000 then. You're at 8,000 today and you traded 14. You traded 14. Yes, in a wrecked economy, that will come down on a pullback, just like we are concerned for oil. And we've warned you, gold long, oil short. How did the gold long, oil short trade go, by the way? Let's have a look. You know when you were given this. It's on this channel. All our YouTubes, good, bad, and ugly, are still here. US oil. There it goes. Have a look at it. Let's see how it's going for you. You can see how gold and oil are doing. This is the second call of gold and oil. That's why I feel we're going to get a collapse. Very similar to the CV19 collapse. You see that one spike? That's oil going to zero. That was an infinite trade when we gave it. Literally infinite return. You would have shorted oil to zero. We gave that to you. You can see this inverted head and shoulder way back then. with it. And guess what's happened? It's come back again. I have to get that spike off the screen because it distorts all the scaling. It's come back again, and you are here again, and we have given you targets again. Does it go to infinity again? No. How many people have given you an infinite long short trade where the one underlying actually went minus in the future markets? Tell me one person for free on YouTube that gave you a short that went to a minus number and also had an associated long that absolutely killed it and is still killing it 4 years later. Gold, long, oil, short. Market Sniper YouTube channel right here, right now, 4.5 years ago, repeated it again recently. This is your trade. Real reserve asset, real reserve physically held asset in your grubby mitts. That's what they're chasing, not Bitcoin. That's what they're all buying, not Bitcoin. They want you in the derivative currency of the future realm. They never want you in the money. They want the money. They want to tax you with inflation, proliferation, and unrealized capital gains, and wars that they can steal from you, corrupt against you, and do everything they wish against you. And you are docile and accepting because you consume their garbage food. You rely on their garbage drugs that neuter you. You're sitting there like a wimp and a half man. Your bloody ancestors were warriors and would never have tolerated this. That's where we've got to. That's where you are. Time to wake up. Time to wake up and get a little pissed off. This is your cold bucket of water over your head. I'm here telling you, they're going to kill the debt half for Northern Europe and the United Kingdom. I'm telling you, just like I told you, they were doing, it was going to happen in America. You are following America. You are getting your second inverted head and shoulder with upside targets for gold. A single ounce of gold will potentially get you through 62 barrels of oil. The consumer is wrecked. He will not be traveling. He will not be driving. That is why the energy class commodities that we've continually warned with all the inflationists will be the laggards. That's why we will even say get a soft before you get an energy commodity, because you are part and parcel of it. And to keep the inflation down, it's the one thing they cheat with. It's the thermostat. Whilst that is all happening, they can make it look like inflation is down. They own it. They can run it low. Everybody is busted, and you will all consume less, and they'll make the price lower and even run potentially at short-term losses. Wasn't zero a short-term loss? Is that not big enough for you? When they stopped you from going to work, they locked you up and you went along with it. You took their farmer. They went long farmer, short oil on their own back. You saw the Saudis, the internal Saudis, the fork of the chosen one chain, sell their entire holdings into Aramco and make it public listing for their citizens to be bag holders for the CV19 event. We called it. We said it's absolutely the reason why it's happening. It's further endorsed our view that that whole event is going to happen and that you should be out of oil. That was all happening second half of 2019. They even did a fake drone strike that they blamed on Iran to try pump it up. They are all in it. They are all raping you. The full case study for that is right here. Results. Go to the oil case study. See what we told you last time if you weren't here. If you're a new subscriber, start understanding how they steal from you. Start understanding the corruption of these people. Get with it. See every video, every chart right here. On the stages where we presented it and warned you, you need to be long gold and out of the energy classes. The European debt markets are now going into failure. They will go into higher rates. You should be getting out of all your excess property in Europe. You should be getting out of Europe full stop. You should be getting your fiat currency into gold. Yes, it will probably pull back in the recession that is coming, whilst a little bit of bid goes back into the treasury markets and the likes of TLT, but the trust has gone. It'll be much, much smaller, and the dips will be bought. And who's buying it? Russia will be buying it. You guessed it. You will also have China that will be buying it. Here's your Aramco IPO, citizen bag holder and stuffing. We said that and wrote it. There's the date on the article that you could see, 2019 November 4. We warned we put that article in and said they're going to stuff their citizens. This is breaking down. That was the beginning of the breakdown in the oil chart. That is a tweet. You can see it dated 29th of November coming out of a flag. You still could have got short oil if you were following us on X, way up top here at somewhere between $61 and $62. It ended up more than minus. Cash markets essentially zero. Futures markets minus 42. You couldn't even give it away. There wasn't storage space. It was a glut. They pumped and pumped. Everything is there for you, and I'm here telling you what's coming next. And I'm here to say you're not prepared. It's time you got busy. It's time you joined a community that actually understands what the process is and what you're going to be going from. My German friends, my Dutch friends, my French friends, the UK, you are absolutely wrecked. I know you might have children, some of you, and at school, and you don't want to move. The rest of the world is not nearly as bad a place as you got told. Everyone in the Soviet Union got told it was the best country in the world. There's no reason for you to go anywhere else. You listen to your Bolshevik British Broadcasting Corporation and you think there's no place better for you. Guess what? You can go someplace where the sun shines, where there isn't an active attack vector against you. You're being overrun. The real Bolshevik revolution is coming for the West. This is a debt-based collapse, very similar to the perestroika and glasnost period that was for the USSR, that saw the falling of the Berlin Wall, where everything was chaos. There was no law and order. There was no state support. It fell apart. You are facing this potential. The HVFs don't lie. It's on all of them. The French, the Dutch, the German, the UK. Your debt is going up in interest rates. Your property is going to become less affordable. The buyer will be some subsidiary of BlackRock, hoovering up every distressed asset. You will be retrenched in an environment that a government is running short of money while throwing it at the military industrial complex to fight the bad Russians in Ukraine, to make actual territorial incursions in Kursk. How do you think that's working out right now? You're going to be handed the bag for that because you've got a bunch of political leaders that are inherently intent on creating a controlled demolition of your economy. It is not incompetence, it is intent. They are managed intent into doing this because this will lead to the financial suffrage on your good self. Okay, you've had it. You've had the rant. There's a recession coming for the US. They need it. They want it. They've got $9 trillion to roll over. They need the US 10-year to come down. Here's a US 10-year. Let's do it for you. Let's say goodbye to one of these charts. Oh, I didn't show you this one. Euro bond future. Here it is. Inverted HVF. If you want to know what you could trade, it's already broken. It's already running. We're calling a breakdown through the 120. By the way, it hadn't been a stellar performer much before this. This is a 3-day chart, roughly. It's kind of a couple of days, really. You've been in a decline here on the Euro bond future, and this is going to lead to a little bit of an upbid on the Euro. Note this little upside HVF just made its target. We also have shown this chart on a far bigger time frame, the W bottom on the Euro, because if you push your rates up, your currency goes up too. And with all the extra amount that your rates are going to go up across the board on all the nation states of the major funding nations of the EU, all heading higher, with Germany going from sub 2.5 to through 4, with the UK going right through 5.7, probably running 6 as the biggest, most expensive failure in debt, you are going to have the euro rally against the dollar, and that is what happened. We drew it technically, we've shown it, we've been discussing it in our community. You had essentially an inverted head and shoulders with a W head, and this has bounced up, up, up. It's already made target number 1. However, it's going to continue to creep as long as those rates are getting higher because the debt is collapsing, which is why I showed you the seesaw. So America's going to rest on its currency strength and get a bid under its debt so that it can get a semi-reasonable rate on rolling 9 trillion worths of debt. That's right, 9 trillion. Who's going to be a buyer? You want to buy? I got 9 trillion pairs of pink Crocs for you. They're real scarce. You can have one and be the only one that's looking cool. Really, it's true. 9 trillion of them. That's right. The US is going to roll 9 trillion at lower rates by forcing the recession, by cutting government workers. And what will actually happen is you'll get contagion, because those guys go onto welfare, they suddenly become a drain, a bigger drain. They will stop spending. The liquidity is going away. The liquidity was created by borrowing money into existence by over-exuberant governments that crowded out private expenditure to become the expenditure of last resort. Amazon, thanks to defense contracts, etc., etc. Microsoft, also server farms, etc., etc. These companies have all been pumped up on huge amounts of statist expenditure. And the correct consumer who buys books or weed eaters on Amazon is no longer going to be there either. So that's over 50% of them. What do you think the Mag 7 is going to do? This could be a very big correction in the stock market if it gets into contagion level. America has to right size. You have already been in a recession since you met the criteria the first time a long time ago. You remain in recession, and it's likely to get worse because they are cutting jobs. Status jobs, many meaningless, crappy jobs. It's actually the right thing. But it's kind of like taking the heroin addict who's consuming 10 times the lethal dose off heroin and putting him on green smoothies in one day. Good luck without getting him hanging himself. Okay, that's what's going to come. Currency up, euro, generally. It's already made the first target. Don't chase in right now. Debt down in value, rates up. Bad for property market for Europeans. That's coming at you, following the American path as part and parcel of the orchestrated destruction of the global Western financial system that will see you impoverished by probably banks going down with your money. How much gold do you own physically at your home? That's the big question. How much silver do you own physically at your home? Is it all stuffed in CBDC tokens that they will pivot into some status coin to have you function as a derivative of real money, or do you own real money? Click the link below, book a call. It's time to build wealth during reset times, preserve your capital, and ensure as much freedom as possible. And that is what we aim to do for all our community members. Till next time, thank you for watching. Thank you for listening. Thank you for acting if you choose to act. Watch this. We've not been wrong on the bond markets in 5 years. Till next time, I'll catch you later. Bye for now.
Tired of profit wipeouts and blown accounts from following trade signal groups and other YouTube channels? Looking for a better way to trade, reduce your stress, and minimize your risk? Become a skilled technical analyst and see the charts and markets in a new light using the successfully proven HVF method by Francis Hunt, while being surrounded and supported by a principled, structured, and experienced community. Enjoy a constructive learning environment while practically trading markets, supported by a bespoke platform run through browser and app, specifically designed to teach and engage you whilst learning and growing as the markets move. This is not a Telegram or Slack signal group. All trade ideas are based on a proprietary technical analysis process honed over decades, which is the HVF method, leading to trade ideas with fast-moving breakouts and tight stops, exact entries and exits, nuanced interim considerations, and ultimately, strong rewards. Submissions are graded and scored by Francis for potential high-quality setups, and we provide bespoke tools to help get the job done properly and with precision. Over time and with focused effort, you'll begin to look at charts and price action just like Francis. Community updates every day by Francis and our 3 webinars a week provide a 360-degree approach, which are presented by our experienced team of trade leaders to spot potential trades. We're a community of self-actualized individuals, spanning the globe and active 24/7, 365. The premium community provides a warm, supportive, and cooperative place for people willing to listen, participate, contribute, and to learn. We've changed thousands of traders' lives. Transform your approach to trading now. Transform your life. Book an introductory call with us on the link below.